Retail investors look to commercial property, petrol stations, childcare centres and the like to boost returns. Prime Minister Anthony Albanese comes out swinging against the banks, and strong inflation figures in the United States are set to push the local market and the Aussie dollar lower today. It's Monday, the 27th of February, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I just have to tell you, I had lunch with my brother over the weekend and he said, "What's Michael Thompson like?" And I hesitated, as I would. And he said, "I think he's funny." There you go.
That's what he said?
Yes. He thought you're very humorous.
Oh, now it puts a lot of pressure on me to perform. I'm not going to say anything now and just let him continue to believe that. You have an interview coming up today, Sean, which is not funny, obviously, because it's about superannuation. It's a very serious topic, particularly at the moment. Tim Steele, the CEO of Class, which is an accounting technology company that focuses on self-managed super funds.
Yes. Now, Class provides back-end services for many self-managed super funds in Australia. So it really knows what's going on in that sector. So I talked to Tim all about, well, we start off with about, when should you be in a self-managed super fund, how to think about them, right through to how potential changes in superannuation laws, which the government is talking about at the moment, could hit the sector. Very, very interesting chat, not only for those in SMSFs, but just anyone interested in super and investing.
Yeah, it is a really topical interview. It's coming up a little bit later on, definitely worth sticking around for. But the main story this morning, Sean, we all know that house prices are falling, and we'll find out more about that later this week when CoreLogic releases the February data. But it seems that retail investors are now looking for alternatives like fast food outlets and childcare centres and petrol stations.
Yes, I suppose it makes sense, really. Over the past week, there's been a series of commercial property auctions in Sydney, Melbourne and Brisbane. Of the 30 properties offered, 29 were sold, generating about $85 million in total sales, according to the Financial Review. Now, the report quotes Ingrid Filmer, Chief Executive Officer of real estate company Burgess Rawson, who hosted the auctions. She says the sweet spot is under $3.5 million, and many mum and dad investors are buying with cash, so they're less affected by interest rates. She says the commercial properties often involve long-term leases, so it might be a lease to a major brand like McDonald's, Hungry Jack's, 7-Eleven, United, the service station group. They're less likely to default, and the sites are often in prime locations, which of course is very handy when you want to sell it and you're hoping for a capital gain. Burgess Rawson's own portfolio shows average yields or returns of about 5.4%. Pretty good, really. Of course, investors, be warned, these yields certainly bounce around a bit, and buying a commercial site is very different to buying a house with different costs and different government regulations, etc. And investors need to understand what they're getting into. Now, Michael, as we always say, this isn't financial advice. Do your own research. But it is interesting that there's a real shift among retail investors to get into non-residential property assets.
Yeah, it's an interesting trend. Sean, a week ago we saw the preliminary clearance rate for house auctions jumped. What happened over the weekend?
It's actually another really strong weekend with a rate hitting almost 70%. It's pretty good. Again, the lack of stock helped the final figure. For example, in Sydney, there are 851 homes listed for auction. That was up more than 20% from a week ago, but still well below the 1,200-odd level of 12 months ago. Now, Sydney's preliminary clearance rate was 71.8%. Really, really strong number. Melbourne was 68.2, Brisbane was 64.8, and Adelaide, the mighty Adelaide, throughout this last housing cycle, Adelaide has done better than anyone, at least in clearance rate terms and pretty much in price terms as well. Over the weekend, it came in at nearly 89% clearance rate for auctions. Pretty good. These sort of rates aren't typical of a falling market, even with low stock levels. It's going to be very interesting to see if house prices kept falling this month. We'll find out later in the week when CoreLogic releases figures on that. It's quite possible in Sydney prices stabilised, maybe even rose slightly. So a very interesting period for the housing market right now.
Sean, can I suggest a campaign for fear and greed?
Yes.
You sound concerned by this.
I am.
Well, no, I spend a lot of time on my domain app and my real estate app, and I'm not the only person that does that because I can keep an eye on everything that's happening and kind of virtually head to auctions and things without ever having to leave the house. I'm living the dream. But there's just been so many properties lately that have sold, and they're all price withheld, which is usually a sign of kind of a weaker result than was hoped. I think that's the logic behind it. But I'm sick of price withheld. How am I supposed to be nosy? How can one be a sticky beak if you're just looking through your domain app and auction, sold at auction, price withheld, sold at auction, price withheld? Let's ban price withheld permanently from the real estate vocabulary.
Let's take away the buyer's rights. Let's say, I know you just spent $3.8 million and you don't want your friends knowing. We want to know. So
see, I'm detecting a slight undercurrent of sarcasm there, Sean. It feels as though you're not fully on board with this.
If I sold my house, the last thing I'd want to know, people to know is how much I sold it for, unless I sold it for a lot of money, maybe.
Yeah, okay. Well, I've always thought that it was the real estate agents that are kind of keeping it quiet.
No, so I think what you will find, and this is, I mean, I haven't looked at this for the last couple of years, but prior to that, when I was certainly working at the Financial Review and the Sydney Morning Herald and the Age, the last people that want to keep information away from the public in terms of house prices are the real estate agents.
But what if if they're less good than hoped?
It's mostly about selling a house. So, a 4-bedroom house that goes for $2.2 million in a sort of Parramatta in Sydney. Is that a good or bad price? You have no idea unless you've been to the house, really. So I think that the real estate agents are always happy to tell you the price, but I don't think the sellers are.
Okay, so you have just vetoed my campaign.
Sorry, I'm out.
We are off to a very bad start this week, Sean. Looking overseas, international news, the big news in markets came out of the US over the weekend.
Yes, really big news. Inflation figures in the US came in higher than expected, pushing markets lower. Analysts are hoping that inflation in the US has peaked. Over the weekend, the Personal Consumption Expenditure Price Index was released. Now, that's the Federal Reserve's preferred measure of inflation. It came in 5.4% higher than a year earlier. Core PCE, so core personal consumption expenditures, like core CPI here in Australia, it excludes volatile food and energy prices, it came in at 4.7%. Now, both figures were higher than expected and came as consumer spending surged during January. Put all that together, it doesn't suggest that inflation is falling. Now, that triggered a sell-off in bonds, which, of course, Michael, pushed yields higher and suggests that investors think interest rates will rise further. The yield on a US 2-year note pushed beyond 4.8%. Now, that's the highest level since 2007. The US dollar also climbed, and that pushed the Aussie dollar back towards 68 US cents. What didn't rise was Wall Street. Now, the broad-based S&P 500 fell more than 1%, and the tech-heavy Nasdaq was off 1.7%. That, of course, will put downward pressure on the local ASX when it opens today.
Speaking of the local market, Sean, earnings season is coming to an end. In the weekend edition, which is certainly worth, if you haven't listened to that one, go back and have a listen. It was a very kind of wide-ranging conversation from Putin and inflation all the way through to swingers parties. But in the weekend edition, you called earnings season solid, not spectacular.
Yes. In fact, on average, first half net profits have come in a little over 2% below expectations, according to UBS, one of the big investment banks. The resources sector has been the biggest laggard, coming in 4.2% lower. Now, for the full financial year, which will end 30 June, consensus estimates are now for profit growth of 6.6%. Before earnings season, that was 7.3%. So that just suggests professional investors are downgrading how much money they think big corporates will earn. Overall, the S&P ASX 200 is down 2.3% since the beginning of earnings season. Now, keep in mind, it did surge in January, but that is an indicator that perhaps results haven't been as good as hoped. So I think most investors now think the Aussie economy is slowing, but I don't think it's unlikely to find itself in a deep recession. The S&P ASX 200 finished up a touch on Friday to 7,307 points. Its price action in the past few weeks suggests that no one's looking for a recession. In fact, Friday was actually a better day for the large caps. All the major banks were higher, led by the Commonwealth Bank, which finished up 1.3% to $101.22. Commonwealth's really been sold off since reporting 10 days ago. In fact, from its peak this month to its low, it was down nearly 10%. Pretty incredible. It has fought back somewhat. It was a rough session for the iron ore miners, with BHP and Fortescue both down 1.5% or more. Rio Tinto was off 3.6%. Aristocrat Leisure jumped nearly 3% to $36.88 after actually saying didn't know how proposed poker machine reforms in New South Wales would affect the company. Interesting. And logistics software group WiseTech Global had another strong day on Friday, up 4% to $63.12. Now, that stock's up nearly 80% since its low in the middle of last year. Just rounding out the market chat, Michael, big week for investors, of course, in Australia, with December quarter economic figures due for release on Wednesday. The consensus view seems to be somewhere between 2.5% and 3%. In fact, we talk to Stephen Koukoulas after this show all about that.
It is a big week, isn't it, Sean?
It is a big week.
Very exciting week, particularly for the economists. We will be back, though, in a moment with the rest of the day's business news. Sean, Prime Minister Anthony Albanese has come out swinging against the big banks, saying their behaviour in not passing through high deposit rates is completely unacceptable and the banks need to get their act together.
Albo ain't happy with the banks. He said the government has communicated its concerns very loudly and is doing so again. Of course, a couple of weeks ago, the Australian Competition and Consumer Commission launched an inquiry into the issue, saying increases in rates for deposits have been smaller and less consistent than those applied to mortgages. If you're not sure, look at the bank's net interest margins that we've heard about in the past few weeks. Certainly, they're rising, which is factual proof that that's exactly what's been happening. Albanese was also asked about the Reserve Bank Governor Philip Lowe and whether he'd be reappointed in September this year. He didn't quite answer the question, but he did say Phil Lowe has the confidence of the government.
Oh, hang on. Isn't that the equivalent of got the full support of the board?
Something like that, yes.
The kiss of death?
Yes.
Ooh, watch this space.
Mm-hmm.
And Sean, as well, there were more hints from the government yesterday that it's ready to impose a cap on large super fund balances.
Treasurer Jim Chalmers said the government is considering whether the nation can afford the incredible tax concession, his word, that helps wealthy Australians. While the government hasn't yet made a decision, Chalmers thinks the $3.3 trillion super system needs to be more affordable and equitable into the future. Chalmers has also found himself in a war of words with former Prime Minister John Howard. Now, Howard came out over the weekend saying the major union-backed super funds acted as a House of Lords for Labor politicians. Chalmers said he respects Howard and he deserves much better than to be wheeled out to prop up dodgy arguments. That phrase, wheeled out, didn't go down well.
Oh, bit of drama. I love it. Also yesterday, Sean, Energy and Climate Change Minister Chris Bowen said the delays in Snowy Hydro 2.0 are deeply disappointing,
especially for the stability of the energy grid. But the government won't be holding an independent review into the near $6 billion scheme. Now, the mega pumped hydro project has been stalled for months after Florence, which is its big, massive tunnelling machine, became bogged. It effectively halted the drilling of a 27-kilometre link between two of the big reservoirs. Bowen also said a future ban on coal and gas projects is not on the table as the government negotiates with the Greens over climate policy. Of course, the Greens are pushing for a blanket ban.
Sean, this next story is about Brambles, the pallet maker. And this is one of those companies, this is the company that you always actually get visibly excited whenever we talk about it. I've never seen someone so enthusiastic about kind of wood hammered together. Brambles on Friday reported a 9% rise in net profit for the December half and upgraded its earnings guidance, sending its share price up 7.5%.
Isn't that exciting, Michael?
Well, I'm waiting for you to kind of start jumping out of your seat because usually you'll tell me how important pallets are and how it's a good kind of economic indicator and all of this kind of thing. So go for it.
All that. Take as read. Now, the one that I really liked about Brambles was years ago when they lost all their pallets. They had to come out, and I can't remember the numbers, but it was millions of pallets. They came and said, we've lost X million pallets. Don't know where they are. I thought that was quite funny.
What? As in they were sitting in different kind of warehouses or like been used in deliveries and just had never been returned, that kind of thing.
Yeah, probably the latter, I think, from memory.
Oh, that's cool.
Yeah, that's when I started liking brambles. I thought,
It's a long time to be excited about that story, though, Sean.
That's true. Brambles has reported inflation in input costs. That wood is costing more, but it has been able to pass the higher prices on to customers. The good news is that Boss Graham Chipchase reckons there are signs that inflation is lessening. Now, you said that I like Brambles, so I'm going to tell you a little bit about the company, Michael. 340 million pallets, crates and containers across 60 countries. Is that not cool?
Yes. I mean, that's big.
And it's big. And one of the really exciting things for Brambles, right, is that during the end of COVID, retailers particularly in Europe and in Australia, but retailers and other firms were hoarding the pallets because they actually wanted increased stock levels because they were worried that they'd run out of supply. So they kept hoarding the pallets, and sitting on the pallets were all those goods. Well, they've stopped doing it, Michael.
God, your eyes are shining with delight and excitement right now.
Totally. Finally, Brambles are starting to get back their pallets. Hell of a story.
Do you want to sit down and just take a moment?
Yeah, why didn't we lead with this story today? Housing schmousing. What about pallets?
Pallets, schmallets. That's what I say. In international news, Sean, we need to move on. You were getting too excited. It's getting uncomfortable in here. G20 finance ministers have been meeting in India and have been unable to adopt a joint statement on the global economy after China tried to water down references to the Ukraine war.
Yes. Now, remember, the G20 includes China, Russia, India, the large European nations, France, Italy, Germany, Japan, Korea, Saudi Arabia, the US, the UK, Australia's in there, of course. Do you think it's a surprise that they didn't reach agreement?
No.
I mean, you guys say Russia, China, and the US to begin with, and they want to make some communique about the Ukraine war. Fellas, it's not going to fly.
Do you reckon we're going to be able to get to a point? No, we're not.
Just don't even try. I mean, Russia, for its part, accused the United States, the European Union, and the rest of the G7 nations of disrupting the ministers' meeting by trying to force through a joint statement on Ukraine. I bet they were. In the end, the current G20 president, which is India, issued a chair's summary, which said most members strongly condemned the war in Ukraine. And there are different assessments of the situation and sanctions. I wonder who didn't agree with that.
Oh, I wonder. It's one of those stories that you go, okay, diplomacy in this case is just, it's not getting anywhere. Now, Sean, this is a really shocking story. The death toll from the earthquake that hit southern Turkey and Syria on February 6 has now reached 50,000 people.
Yes, the Turkish government has now arrested 184 individuals suspected of being responsible for the collapse of buildings, mostly due to poor construction practices. The number of deaths in Turkey is now 44,128. Includes Syria, it's above 50,000. More than 160,000 buildings containing 520,000 apartments collapsed or were severely damaged in Turkey by the disaster. It's the worst disaster in the country's modern history.
Sean, final one for today. Using marijuana every day increases the risk of developing heart disease, according to a major study released in the US over the weekend.
Yes, maybe some of our listeners are interested in this one, not sure.
I was wondering who you are targeting with this story. I'd be very intrigued to know. Please go on.
Yes. So cannabis is legal in some states in the US. It's recently, for example, in New Jersey, New York, it has become legal, though federally it is still illegal. But having visited there recently, its usage is prevalent everywhere in New York, at least. So health studies really have greater significance than previously. Daily cannabis users are 34% more likely to have coronary artery disease. Previous studies suggest marijuana users have an elevated risk of suffering strokes, particularly younger users. However, the flip side in all this is that its use is on the rise in many parts of the world because of its ability to relieve chronic pain and help with conditions like chemotherapy-induced nausea. It's not a one-sided coin. There is two sides to it, but it is worrying that it is being legalised and definitely seems to be a link to coronary heart disease.
Yeah, some side effects there that may not have been considered. Sean, up next is the Fear and Greed Daily interview with Tim Steele, CEO of Class, which is, as we mentioned, a technology company that focuses on accounting for SMSFs.
Yep, all about whether you should be in an SMSF, how to think about it, how potential changes in laws will hit the sector. A very interesting chat with Tim.
Yeah, and also coming up as well is Fear and Greed the week ahead, featuring our resident economist, Stephen Koukoulas. A very big week for Stephen this week.
It is very big. So we have GDP data out on Wednesday, which is about the December quarter, but there's also lots of partial indicators this week about what's happened since the new year began. And so Stephen is very keen to tell us all about it. I do have to put a teaser in for our listeners. Very, very big interview tomorrow morning.
Yes, it is a possibly the best interview we will have all year.
Or not.
It's a little bit harsh, Sean. All right. Well, we'll leave you with that.
Well, no, actually, I'm going to go further here, Michael. It is a new author. We are speaking to a new author whose book has been picked up here in Australia, an Australian author, and in the US, and I believe in parts of Europe. Pretty good for a debut author named Michael Thompson.
Yeah, a bit of a dreamboat, I've heard.
Let's just move on now.
All right. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 27th of February, 2023. Make sure you're following the podcast and join us online on LinkedIn, on Instagram, on Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.